Hi, today I'll explain to you how I made $4,600 in 1 minute trading CPI without gambling. We'll study the plan, the lower timeframe execution, and how to trade the news properly without risking your whole account and blowing up thousands of dollars. I'll show you how to trade the news properly, making great money in the process. And most importantly, how do you position yourself to have the lowest risk and a massive upside opportunity? I'm Moises, Altayo, and I've made over $1 million trading at 23. I started this channel to share the real truth about how the markets really work and to show you how to trade the right way and build long-term wealth in the process. I also have the best mentorship in the industry. If you'd like to apply, you'll find the link on the description below. Let's begin now with the video. And we'll start with the higher time frame plan on DXY, because whatever is going to happen on the higher time frame, everything is going to follow. Therefore, if you can always know where price is going, you can always make money. And that is the first thing I always do is, where are we going next? And in order to know that, I must understand what has happened, what is the narrative, and build upon that, and then everything will come to me. Since the trade was in Euro USD, I always focus my analysis on DXY. It's the biggest market in the world, and the dollar is the most important currency. And here on DXY, we are on a higher time frame range. We swept the lows here on 2008, and we've been going up ever since, flipping the 50%, which is exactly the level that we are right now, which is why it's such an important place. And if we're bullish, we'll expect the yearly candle, which is the chart we're looking now, this is the 12 months chart, to make an open, low, high and close. Accumulation, manipulation, distribution. We're on Q2 as well, therefore it's highly likely we're forming a low here. But let's go deeper into this to understand what has been happening here on the XY. We swept these lows of this higher time frame range within the 50% of the bigger range, which we've been forming this range for 2 years. These are the lows from even 3, from 2022, 2023. And we form here a very common pattern that always happens at important key levels, which is we get the first dig into the key level, form a range, get a little bit of a bounce, make people believe that the low is in, and then dump it again, stopping everyone out before we make the real low. And I believe that's exactly what's happening here. We got the move here, weekly candle range, we rejected the 50% of it, and then we've been going down ever since. And the trade that I took was the short here on EU, taking Monday low. However, I had 2 scenarios in mind that we were working on with my students, which is, since here we took previous month low, which is the low that we did on May. The first week of June we take it, we get this move up, and then second week we take the low again. And what I was wondering is, are we holding this key swing high and doing a false breakout of Monday low, or are we doing a true breakout and going for the low that we made on April, for the overall low of the year? I have it here. And we ended up having this second scenario. However, this is irrelevant to the trade. The main thing is that I got this move, okay? But it's important to understand the whole narrative I was seeing, because based on this is how my lower time frame execution was made and how I made money. Another thing to keep in mind is that why I was thinking this could be the low and we could have just made like this. Because here we swept the 50% of this price leg. We swept all this liquidity at the 50% from here to here. Not only that, but we form a 3 drives pattern, which is grabbing liquidity. So anyone who is trying to long here, they long, they get stopped, they long again, and they get stopped, which is a pattern that makes it not necessary to take this liquidity. So that's why I was a little bit uncertain and not too confident that we'll get this straight move down as we got, right? We're also forming here a lower time frame range, and we had left these equal highs at this key swing high here. We swap Monday high, never take this, and get straight down. And I called this live after we got the true breakout here at the end of New York. I share it on my Discord with my students. You can see it here after this is at 3:51 New York time, so that is at the end of New York in the close. After we saw that we did a true breakout of Monday low, I drew this, and we didn't even hit the 4-hour candle range 50%, we just dropped with a gap, and we got this today. Here. Absolute magic, as usual. Now let's go into the lower time frames to show you what I was seeing and the specific and the precision of the entry. First of all, Tuesday, take Monday high. So we have a Monday range in play. We reject it, form a key candle, which is this one mark right here. And then we leave equal lows for Monday low, right? Monday low is here, which this might be a sign, right? Maybe not, it is a sign that we're going lower. However, the question is, are we doing a true breakout or false breakout of this low? Because as I show you, we could have done this move, right? Make a low here and reverse and go straight up. Now the news of CPI were on at 8:30 here, Wednesday, 8:30 a.m. always on New York time. Therefore, what do you want to do if you want to be on a trade, right? The chart is always telling you what's next, right? It was showing you signs like leaving the equal lows, taking Monday high, and rejecting the key candle at 3 a.m. at London, which is the best time to form a swing high usually. You will notice that a lot of times the swing high or low of the day will be formed between 3 and 3:30. So this is the perfect time that is happening. This is you not just to, oh, London kill zone. You must study the 4-hour candles. That's the key. And the key to make great money without risking too much in the news is being in a position before the news happen. But most importantly, having that position with a safe stop loss, meaning you enter and you want price to expand from your entry, like you enter here, price expands from your entry, and then you can have a safe stop loss or you can put your stop loss at break even. I will show you more in detail now what I mean. But let's see first what happened here. Wednesday, we have the KC from Tuesday. We open, go up, open, high, low, and close. We open Asia range. London begins almost touch the key level, dig well into the key level, and here we can go to the 5-minute. This is what I was looking. You'll see it more clearly. Second touch, again, what I explained you at the beginning happens in all the time frames. Price is fractal. Whatever is happening on the highest time frames, the same is happening on the lower time frames, just in different scales. Take the high. And as soon as we break this low truly, I know that the high is in. We also had a key candle, which is the most advanced entry. 1-minute key swing low here. However, I was waiting for this one. And now we can go to EU, so I can show you my exact entry, which was here. We sweep the low again, like on DXY. This is the most advanced entry. And then the safest one was this one. Boom, take the low, break truly above this high. As soon as I see this, my entry is here. Then we expand from my entry, and here I'm $2,000 in profit. And here's where I decide to hold. Now, the news you can see here is the candle of the news at 8:30. And what did I do here? You have two options. You can either put your stop loss at your entry, which is a little bit risky because this week could have come a little bit deeper, like here, and it could have stopped me, right? Before the real move happens, which is what happens to all these people who are in here trying to take a long. They're longing, and just before the news, they get stopped because if someone is longing here, it's very likely that their stop loss is at one of these lows because here it's too low for them. So what they do, the market makers, they stop them all before the real move happens. However, if you are in from earlier, you have the possibility to have massive upside with a very minimal risk, correct? You can either have zero risk with your stop loss or entry, or you can have a reasonable stop loss where you're not risking your whole account, for example here, right? Which is above this, holding these FBGs as well, or even here you could put it, right? If we take this, it's likely we're taking this low. That's why your stop loss always goes at the real invalidation of the plan. And on the news, we got this massive big candle to the upside. And I went almost from break even, right? It was almost at my entry, to $5,000 in profit. Now, obviously, if I had held the trade for until the high of the year, right here, it would have been probably between $16,000 to $20,000 since it's almost 200 pips from my entry. However, you can always say, oh, what if I did this? What if I did that? Well, the important is that you cannot go to the past. You don't gain anything by regretting what you have done. You can only learn from that experience and become better and improve. Not only that, but I made $5,000, in 1 minute. So why should I be complaining about? What am I complaining about? And why did I close, right? That's an important question. I close on this high. You can see I have Monday low on DXY because it was exactly when we swept the Monday low here on DXY. And as I explained at the beginning on the whole narrative of the plan, I wasn't really certain that we were gonna break it truly. And I decided to just close it and not take the risk. And it was very beautiful, right? Zero risk to make $5,000 in a minute. It's incredible, right? It's incredible what you can do once you truly understand the markets deeply. And you will hear a lot of people that say, oh, I'm not trading because it's CPI, it's news. As long as you always know what you're doing and you're using a consistent logic, which is based on objectivity like I do, everything I do, as you see, it's based because something is happening. I'm not just opening the chart and doing random lines and things. I'm looking at specific candles, at specific highs and lows, and based on what happens, I determine what's next. Right? Like here, we took Monday low, and it's not certain yet if it's a true breakout or false breakout. So I can make a decision. Do I want to take the risk and have the risk of going from $5,000 in profit to zero? Or do I want to hold and take the risk and potentially make $20,000? On this case, I decided to close. And by the way, as always, I don't know how I do it, but when I always draw it and I share it, it always happens. This was Tuesday at 7 p.m. It's at the end of New York. Again, this is, midday, afternoon, 1 p.m. New York. I shared this, that we're going to take Monday low for Wednesday, and it is exactly what happened. And before we finish, I wanted to commend you something important, which is this text I wrote this morning here for my mentorship. I wanted to share it with you. I'm not going to read all of it, but because where we were right now on the chart, we've been... You see that the past week, this week and the past week, it was all ranging this month of June. And this inspired me to say that the majority of the trades that you will ever do that you will lose, once you're a master, meaning that you understand the strategy, you understand your psychology and know how you trade, you understand your risk management, and you've got enough hours of experience, you're not a beginner, you will see that the majority of your trades that you will lose is because of two reasons. The first one is that you get chopped in a range, you're expecting an expansion, and price just stays chopping in this choppy range. And this happened to me these past 10 days. I was up in more than 5 trades, like $3,000, $4,000, $2,000. And I kept holding them instead of closing them because I was expecting an expansion. However, prices stayed ranging. So I got stopped or I took a break even. And obviously if I had closed all these trades, I'll be up like $20,000. So it's understanding where are you on the higher time frame, what's going on, and being careful of not getting chopped in ranges. I just wanted to mention this because of what has been going on lately on the chart. You need to be aware always of where are you and act accordingly and adjust your trading, meaning you should be taking more scalps and day trades, not expecting a huge swing trade like I was doing. And the second is basically trying to predict a trade without waiting for confirmations. I'm not going to read into it too deep right now, but it's basically trying to be the hero and get a perfect entry too early. You take a risk and then you get stopped because you're not confirming truly that that level is going to hold. For example, with a key candle on the 15 minutes or a 5-minute key swing, or combining all the key levels that you know. Right? You're trying to rush it and have a perfect entry so you can flex. But those will be the majority of losses you take. And yeah, here it's going to be the video. I really hope you find it insightful, that you like it, and that you are better now trading the news, that you can make more money. And remember that you can apply for my mentorship below if you really want to achieve mastery and build real wealth trading. I'll show you the path, I'll show you the blueprint with the most in-depth, the most quality, and incredible people inside. I'm building a crazy network of savage traders, which was my dream since I started. So yeah, thank you very much for the support. Give a like, subscribe, and I'll see you very soon.